Hi guys, I'm going to do a market review video here. I wasn't able to record my trading. I don't record when I trade live, and so I pulled up my simulator charts here to review kind of what we saw in the market today, and hopefully maybe a little bit later this week I'll trade again on the simulator and record it for you so you can see kind of my thought process as I'm going through trades. But I wanted to point out a few things about this morning that I thought were interesting, and definitely show you kind of what I did on the trade that I took today. First off, we've got some pretty slow or shallow pre-market movement going in, and what this does is it kind of creates a little bit of a support resistance that we can use to our advantage. When the market opened, we had right here is where it opened. It pushed down a bit and tested this actually from pre-market, this support level, and you can see how it hesitated right here where we have this doji spinning top type of candle. It pushed down quickly and then kind of came back on us before it opened into the new candle. Well, that essentially is a stair-step trade, and if I were to expand, or a stair-step pattern, if I were to expand this trick, you could see it a lot clearer. The way it's kind of pushed down here, it's not as easy to read. So let me just kind of expand a little bit here. You can kind of see this TC happening where it comes down, pushes down. We do have our cross here in the SMAs, and this MACD is so squished it's hard to see, but that's also crossing. So everything's in line to go down. The one problem with taking this now as this pushed down, and you'll see this sometimes with the 2-minute chart because of how long this time frame is for each candle, is it had so much momentum that it pushed way too far, way too fast for us to actually have a good entry on that. So, you know, looking at a 2-minute chart, sometimes that does pass on an opportunity because of the time frame. A 1-minute chart, I looked at the 1 minute. I can't remember for sure if there was actually an entry for that on the 1 minute. There could have been kind of where it broke the mini support level there. But what was happening on that is that the market was testing this support level, came back, and then round 2 broke it. I passed on this because it really didn't give me a clean entry on anything there. But it did set up this nicer looking stair-step trade where we have a high here, a lower high here. Keep in mind our SMA and MACDs are in the short position, and with this tricks indicator we've got a series now of lower highs. The 2-minute chart didn't actually produce a kink for us until this candle right here. This was our kinking candle, so our entry is the candle after the kink or a slingshot. We didn't have a slingshot happening here, and so the only option we have is to enter on the candle after the kink, which would be this candle. However, this one also had so much momentum behind it, it ran past our entry zone, which is right. That's the end of our entry zone. We mark our entry zone by where the red short-term SMA line. It doesn't have to be red, depending on how you put it in your charts. But on the entry candle, our entry would be anywhere where the short-term SMA is, and 1 to 2 ticks past the previous low. So let me redraw this for you. So we're looking at an entry zone from here to here, and anywhere inside that range is an appropriate entry. Because this ran so fast so far, it opened past our entry zone, and I passed on this trade as well. So this one the way it moved just made it difficult to find a good entry point on this, and that happens. Don't let that get you frustrated. The one thing you can do sometimes is look at a different chart or time frame to help you with your entries. I've taught people to look at a 1-minute chart to refine their entries, but you got to be careful when you do that, because the 1-minute chart actually had a great entry point for this trade, and you could have taken that entry off the 1-minute chart. The problem that people have when they start doing that is when you trade a 1-minute chart, you see a lot more market noise, and it can start messing with you. You can start wanting to take trades off of the 1-minute chart, but not necessarily using the 2-minute patterns, and that will cause you a little bit of I think it makes your probabilities go down a little bit, because sometimes you can't filter out a lot of that market noise. The shorter time frame the chart is, the more market noise you have. And when I say market noise, it's kind of that back and forth movement of unclear being unclear where the market really wants to go. This is why I like a 2-minute chart. It does a good job at filtering out a lot of market noise, but it's still short enough in time frame wise that allows me to have enough opportunities to make some good money within the first 60 minutes. So with this trade, I decided to pass on this as well. I wonder if some of our members may have taken that, because I know some people do watch the 1-minute chart. But the trade of the day is right here. Look how far this ran up. I mean, this has gone up. If we took entry somewhere around here, we'd be looking at 650. This ran to 57, so we're looking at, I mean, at least 7 points, but it continued to go further than that. That's huge. That's 140% return on margin for the Russell. It's unrealistic with the strategy that we're doing that you would capitalize on all that. And this is why. Because it's very difficult to know when the market is going to do this. And look, when you're trading the Russell or any E-mini market, you're really trading with the best in the world. And in order to trade with the best in the world, especially as day traders like us, you either have two approaches. Number one, you've got to be heads and shoulders above them, or number two, you can take the approach that I've taken and not even try and compete. I would never I would never come close to having the intellect and the capital that these big boys at Wall Street have, and I wouldn't ever think that I could compete with them in a real sense. But the approach that I take is I'm learning how to identify patterns on where they are taking the market, and when I know where they are going with the market, I jump in to pick up some of the scraps. You know, I'm just a small fish in the water, and I'm not going to try and kill myself trying to be as smart as these guys. But when you're willing to just take small pieces here and there, you can do really well and be consistent, because you aren't competing with them, you're just going with them and just picking up some of the scraps. That's how I approach this. Now, when I do that, what I do is I set very, very conservative profit targets that I know will likely get filled. And I do statistics. I calculate statistics all the time to find out how far my average wins are running, and I set boundaries for myself. I test out certain tick points. So I'll say, what in my statistics, how many of my winning trades have run at least 6 ticks, 7 ticks, 8 ticks, 9 ticks, 10 ticks. And I find the average on that, and I say, oh well, look, the market's starting to cycle, and I'm having 85% of my winning trades at least run 9 ticks. So am I comfortable putting my profit target at 9 ticks? Well, maybe I'd like a little higher percentage there, sorry about that, and change it to like 8 ticks. And so 90% of my winning trades are running at least 8 ticks. Well, then I feel good about that, a profit target at that point. That's how I do it. With this particular trade, let me point out what I did. You've got a low here, a higher low here, stair step, classic stair step, textbook stair step here. The thing we have going for us is look at this resistance level. Isn't it interesting how the market hits resistance, comes back, and then round 2 blows it out? And that's what I like. That is my signal. That is my favorite setup, when you can find those, when it really has momentum to push through. So what I did here was I waited for my MACD. I said, now my SMAs, they cross here. We've got a great resistance level. When it produced this doji, I was ready. I was saying, okay, we could possibly have a great entry on this. It came back on me with this candle here, and then our kinking candle right here produced a very vivid kink in our tricks. That is what we want with the kink entry. So I placed an order right here, and it was actually at 650.7. 650.7. Okay, sorry, my handwriting's terrible. It got filled and quickly ran. Now, I had 2 profit targets on this. I had one set for 5 ticks, boom, there, and then I had another set for 10 ticks, boom, right there. But when I saw this moving, it quickly filled my 5-tick profit target, and I barely made it in time to delete my second profit target and let it continue running. And I made 2.6, so we're looking at 26 ticks on my second position there. 26 ticks. I made 5 ticks on the first half and 26 ticks on the second half. That is one thing that you can do when you know that this is going to run far. You can capitalize on that by deleting your profit target, and I'm going to show you how to do that. But that's what I did this morning, and I came out with 31 ticks with 2 contracts. So that was a really nice win for me, and it proves that if you can be patient in waiting for just the right setup and signal, you can really do well. Okay, so I've got right now on my simulator, I've pulled up just an S&P chart here. I haven't actually set this one up on the simulator with the indicators, so I mean, really, I'm not going to make any big trade here. For my example, what I want to show you is how to delete that profit target or manage that order, so that if you do decide to do what I did this morning, you can do that. Okay, so what we have here is a simple bracket. I've just put in a bracket of 1.5 with a 1 point stop, and we'll just see what happens here. Okay, so the market's moving up. I'll just put an order at 1133.3. Let's see, 1133. Okay, so we're in the market here. All of a sudden, you can see both orders here. I've got a 1.5 point profit target sell order and a 1 point sell order for my stop loss. If all of a sudden I see the market moving quickly, here I'll teach you actually 2 things. If you need to move this down, you want to reduce your profit target, say you're not sure it's going to run as far as you need, well, you can right click, drag down, let go, and it's going to say modify order from da 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 to da da da. Click yes. You see how it moved down? You can see it in the chart too. Well, if it decides to run my way real quickly, I can simply left click on it and say cancel manual order. Boom. There it goes. It's canceled my profit target, and it can run as far as I want to let it run. If you need to get out, simply click trade out, and that will cancel all orders in the market. Watch. Trade out. So that's an easy way for you to manage your chart and do kind of what I did this morning. Oftentimes I don't do what I did this morning because it really only it takes a special setup or fill to have that. Like I said, it's really difficult to know when the market's going to do that or not. But as you gain experience learning how to trade, you're going to get a feel for how the Russell moves. And sometimes you'll get a sense like that. Like today, when I was in that trade, it filled number 5 so quickly, I knew right away it was going to run more than a point. So I just immediately deleted my my profit target, and it took off, and I got 2.6 on that. 2.6, 26 ticks. So that's just a simple way to manage your orders while you're in the trade. If you have any other questions about how to do that, feel free to give me a call or text me or instant message me on Gmail. I'll be happy to walk you through this. Hopefully this video will help you kind of learn how to manage that yourself and be a little enlightening on that. But I'll talk to you guys later.